Welcome to This is Health, Wealth, and the Pursuit of Happiness, your source for insightful discussions with economist and author Dr. Murray Sabrin. Join us as we challenge convention, expand minds, and pursue truth.
Welcome to another edition of Health, Wealth, and the Pursuit of Happiness. I'm Murray Sabrin, BA, MA, PhD. There's no BS in my background, never has been, never will be. And we are going to bring you guests that have no BS in their background either. And I want to remind you, please visit mafiusa.com, MAFIUSA.com. We have the unfinished business of the American Revolution. We had political independence 250 years ago. We need to have financial independence from Washington, D.C. And we will bring you guests to discuss health issues and financial and economic issues. And today's guest is someone who is top of my list from the economist world. He's a wonderful economist. His name is Dr. Mark Thornton. Let me tell you a little bit about Dr. Thornton. He's the senior fellow at the Mises Institute, where he was the Peterson Luddy Chair in Austrian Economics from 2021 to 2023. He hosts two podcasts, Minor Issues and Unanimity, at Mises.org. He's written a slew of books. One of my favorite ones is The Skyscraper Curse, and we'll talk about that, how Austrian economists predicted every major crisis in the last century. Dr. Thornton is the editor of the Austrian Economics newsletter. He's has a PhD from Auburn University, and he has been a prolific writer and podcast guest throughout the country. His publications have appeared in numerous newspapers, both regionally and nationally. And he appears, his commentary appears regularly at the Mises Daily and Mises Wire. And so it gives me great pleasure to welcome Dr. Mark Thornton to Health, Wealth, and the Pursuit of Happiness. Good to see you, Mark.
Hey, Murray, it's great to be on your podcast, and congratulations for starting your podcast. I mean, this is a great venture, and I know you are going to help a lot of people get information about the things that they're missing, the things that the government has really put a stranglehold on, and we need alternative voices. So I'm so happy to be here with you to help, push this project forward.
Thanks so much, Mark. I have a bunch of questions that I've put together because you're the go-to guy when it comes to the economy, the Federal Reserve, and financial markets. So let's start with the first question. A lot of economic indicators have been released recently. What do they reveal about the health of the economy?
Well, Murray, I look at all of the economic indicators, and I pay particularly close attention to things that affect the working class, like the personal savings rate, like, things like consumer confidence. And, so I'm barreling down on the working class, the middle class of America. And what I see really is a big problem for that group of people, that large group of people. The wealthy, the 1%, are doing just fine. Their incomes are up substantially. Their consumption is up substantially. Their asset portfolios is up substantially. Now, of course, I'm also concerned with entrepreneurship in the economy, but basically all of that should filter out into the working class and, and see things like the creation of breadwinner jobs and, again, the personal savings rate and things of that nature. And basically, I see an erosion here because largely of inflation, which we had, the bottom 90% were just really getting by in some respects in terms of their inflation-adjusted income. And inflation, unfortunately, for the last 5 or 6 years has really eaten into their purchasing power. And so we see, credit card debt going up, credit card delinquencies going up, and we see people engaging with these apps where they can, order their dinner online and make 4 installment payments on DoorDash deliveries. And so I see that as a very, very bad sign. And that's why I do look at all of the major economic statistics, but you have to really dig down deep in some cases to uncover the real status of the population out there. And I think that debt and the crunch on people's real purchasing power, and I see this, in my hometown, amongst my friends, people cutting back from things that they have been doing for years and years and years, and they've had to adjust their lives because their incomes simply don't go as far as they used to in the past.
Well, the president is telling us that this is the greatest economy in the history of the country. What's the president missing, according to your perspective?
Well, if you're a billionaire like President Trump and his friends and his associates in the government and his campaign donors to his campaign who are billionaires, they certainly don't see retail street level inflation. They have no idea of what's going on, in America, really. And so they're cut off. And actually, a lot of the president's supporters and campaign donors are doing extremely well. People in his cabinet, his advisors, his family are all cashing in a big way on the president's position in terms of what they're doing on the side. They're getting inside information. Mm-hmm. And of course, the president is giving out inside information all the time. So if you have just a one-day heads up on what President Trump is going to say that day, you can make a lot of money because he does move markets. He moves the stock market. He moves the price of oil. He moves the price of precious metals and other things in the economy. So, but, you and I, the people that are listening to this podcast, the average American, they don't have a lot of assets. They're not manipulating. They're not day trading. They're not starting up, internet companies and cryptocurrency companies that have gotten a big advantage from the president. And so, they're not gaining. This is the whole K-shaped economy that really, it's a new term for what the Austrian school has been talking about with the Austrian Business Cycle Theory for many, many years. That, yes, there is inflation, prices go up. And yes, there is a business cycle. When the Fed cuts the interest rate, the investment expands, the economy booms, and then later there's a correction, a recession, or a crisis. But there's also, because of those artificially low interest rates, the people who are in a position initially to take advantage of those positions and make new investments in cutting edge, new products, and to leverage up their entire portfolio to take advantage of higher asset prices. Because when the interest rate goes down, anybody in finance, any banker will tell you that real estate prices go up, land prices go up, stock prices go up. That's why, Wall Street is constantly egging on the Federal Reserve to cut the interest rate because it's automatic, capital gains for them. But it doesn't help the average worker out there on Main Street in hometown America at all.
So, Mark, given your knowledge of the business cycle and you're writing about this for many, many years, where do you think we are in the business cycle? Are we at the top of the boom? Is the boom over and we're going to be sliding into a recession soon? Or are we just in the beginning of or the middle of a business cycle boom?
Well, I would say that we're near the end of an extremely long boom in the economy. And I would date that all the way back to the great financial crisis and the housing bubble, which was, of course, a long time ago. We're approaching 20 years, but certainly the stock market is in a long expansion that dates back really 16, 17 going on 18 years. And, many commentators have referred to this as the everything bubble because until recently, bonds went up in price, stocks went up in price, land went up in price, real estate generally was going up in price, although there was a lot of unusual activity in real estate since the COVID fiasco. But, basically we've had this very long expansion. And right now people are asking, is this coming to an end? Right now, in the very short run, of course, the stock market has increased and gone to all-time highs. I don't know if this is, the last move and it's, in terms of sucking in the last chips on the table or not, but we're definitely at the long end of a very long expansion. And a lot of people have been asking me for signs about, is the bubble breaking? Is it going to come to an end this year or not? And so I think people are starting to think in terms that, yes, we have been in a tremendous long upward trend in asset prices and that it may be coming to an end. I just heard on the way in to do this interview, I was listening to Bloomberg, and the person being interviewed said that they were going to invest a lot of the money in their fund in international shares because the U.S. stock market is so overvalued. And so we're seeing more of that kind of analysis where people in the back room are doing the fundamental financial analysis on the assets that they hold, and they realize that, well, if we look at these measures of overvaluation, we are at a historically very high level. Another analyst just told me that his measure of overvaluation or valuation in general is at the second highest level in history. And so, yeah, I mean, I would definitely issue at least a caution flag, if not a red flag, on the U.S. stocks and everything that's related to them.
Let's go on and talk about some of the things you've written about that relates to this. Briefly, give us an overview, briefly, so people can go and get your book, The Skyscraper Curse. What's that all about?
Well, it's the unusual correlation between the construction of a world-high record skyscraper and a subsequent economic crisis. I know that sounds crazy, and it doesn't mean that the actual building of a building can cause a world economic crisis, but it's a symptomatic of what is going on throughout the overall economy, where people, because of an extended period of low interest rates, they're engaging in highly speculative, highly forward-looking investments. And, of course, real estate is a part of just about every business cycle and every economic crisis. But the fact that people are building buildings to heights that have never been done before indicates to me, and I've gone back and looked at the historical detail, and the correlation goes back into the 19th century. So if we go back into the 19th century, every time there was a record-setting skyscraper, there was also a corresponding economic crisis in North America, if not the entire world. Okay, so the correlation is pretty good.
So what skyscraper is being built now that gives you some pause that we're on the cusp of another economic downturn?
Well, yeah, pause is the right word. It's in Saudi Arabia. It's called the Jeddah Tower, and it was originally it was originally drawn out to be a skyscraper that was going to be 1 mile high. And the engineers came back to the builder and said, no, the crust of the earth would crack through because it would be so heavy. And so they scaled it back to 1 kilometer tall. They started construction in 2017, and we anticipated its completion and the crisis in 2020. But for political reasons in Saudi Arabia, with the new prince taking over power and all the political intrigue that was going on at the time, they stopped the project in 2019. So it did get off the ground, but it never really went very far. And then at the beginning of January of last year, they started construction again. And so this Jeddah Tower is proceeding with adding 1 new floor. And I don't know how the war situation over there has affected construction. There's very little reporting from the kingdom over there, especially under the wartime conditions. So I don't know what's going on right now, but according to my calculations, it would have reached a record-setting top later this year, and then that would signal an economic crisis. So it's in the right region, to fit the storyline. It would definitely set a world record height. And the connection between these world record-setting skyscrapers and the Austrian Business Cycle Theory is that every time you go just a little bit higher, you have to come up with all sorts of new technologies, new innovations, new ways of building, new ways of designing, all of the systems within the building, such as air conditioning, elevators, escalators, moving water and sewage throughout the building. All of that becomes a brand new engineering problem. It becomes a whole new design problem because of those record-setting heights. And so all sorts of new technologies are built, have to be implemented, like moving the concrete. As you can imagine, moving concrete straight up for a kilometer is quite a feat and requires an inordinate amount of power to get that material to the top of the building. And so it's those kind of changes that are actually occurring throughout the economy that we don't really get to see, that we're not really privy to or aware of. In some sense, they're kind of mundane, but it's entrepreneurs and scientists and engineers hard at work creating this new technology, developing new factories and new production techniques and facilities. And so it's a pervasive effect, even though symbolically it's just in that one building.
Terrific. Let's talk about the Fed. Kevin Warsh, the president's nominee to be Fed chairman, who was a previous Fed governor, was just voted out of committee, which means he'll probably get the position soon when the full Senate votes on it. Will this have any impact on monetary policy? Because the Fed chairman only has 1 vote on the Federal Open Market Committee that sets interest rates. So give us your assessment quickly on what the Kevin Warsh Fed will mean for the monetary policy in the U.S. economy.
Well, Kevin Warsh was appointed by Trump. The appointment was announced simultaneously when gold and silver prices cratered back at the very end of January. His nomination came out really simultaneously with that market meltdown. He's thought of as a monetary hawk, someone who will be hawkish and will want to constrict the money supply and keep interest rates near their market levels rather than artificially lower rates that are supposed to stimulate the economy.
Yeah.
And so, but very often that's the case. I mean, Jay Powell had the same reputation, maybe not quite as hawkish as Kevin Warsh, but they all go in and they all want to set an example. They all want to set the stage that they're going to be tough on monetary policy, but almost always they become more and more dovish over time, and they become more and more subservient to the needs of Wall Street and the demands of Congress to finance all the debt and all the spending that they're going through. So, initially Warsh, he does come in with that persona and a bit of a reputation for being hawkish. But remember, I mean, he was Ben Bernanke's right-hand man during the breakdown of the housing bubble and the financial crisis, helping to design. He actually designed and implemented the great bailout of the banks. So, he's definitely an insider, and he's not. I'm praying for the day that we get an outsider in there that really is above and beyond all else beholden to the American people.
Yeah.
And their long run standard of living and long run economic stability, not, the mandate of the Fed, Murray, that we're constantly, it's constantly in the news. The Fed has to balance the unemployment rate on the one hand and economic growth and inflation on the other hand. There's this dual mandate.
Right.
But if you look at history seriously, the actual dual mandate that the Fed follows is that it's there to help finance government debt, to roll over the debt, to help the government spend more than it takes in, and to finance the government on the one hand, and also the other hand, they're there to bail out Wall Street, to help stimulate Wall Street's business, and then to bail them out when things get tough. And neither one of those prerogatives is really puts the interests of the American public first and foremost. And the interest of the American public is in no inflation whatsoever, and long-run economic stability is the other. Those are the two things that are good for American households, for American families. That's what they need, and that's what they're not given by the Fed, because the Fed is, there to help out the government spend more money than they take in, and it's there to promote the business of Wall Street and bail them out, bail out the banks and the financial houses when their over leverage starts crumbling there and they start losing profits.
So basically, we can sum it up this way: the Federal Reserve is the enabler of the profligate spending of Washington, and the if you will, the drug dealer of free and low cost money to Wall Street to juice up asset prices. So the Fed, some people have called them, is one big engine of inflation, inflating the money supply to make sure that Washington can keep on spending, the federal government can keep on spending, and Wall Street could make these oodles of money on the backs of the American people for all intents and purposes. Let's shift gears for a minute. You mentioned about the financial markets that you're fairly cautious on the stock market. I made a presentation 3 months ago where I said that given the data that I looked at the 1920s and the 2020s, in the 1920s, we had a blow-off stock market boom from 1927 to 1929. Could we see something like this over the next couple of years, that the stock market goes really crazy? Because your colleague, Ryan McMakin, the editor of Mises.org, just posted an article showing that the money supply has been really skyrocketing the last few months. So any perspective on that possibility?
Yeah, I mean, that's always a possibility. The Fed has been increasing the money supply. They're depicted by the media as being stingy and tightwads and all that, but they've given up on the quantitative tightening. They unloaded $2.5 trillion of reverse repos starting a few years ago, and now they're engaged in quantitative easing. They don't want it called quantitative easing because of the memory of what happened in the Great Financial Crisis and in the COVID fiasco. But that's essentially what they're doing. They're calling it a liquidity program, but they're definitely active, and it's showing up in the aggregate money supply figures as well as the Austrian measure of the money supply. So they're definitely injecting. And of course, as investors look around, they want to keep up with inflation as well. And so quite naturally, they're continuing to put money into the stock market. It's continuing to go up. Even in Venezuela, that was experiencing a hyperinflation and the government was printing money like mad, if you didn't adjust for inflation, it looked like the stock market in Venezuela was just going to the moon. Even though the value that market represented was actually declining, and the country was experiencing widespread impoverishment, those shares continue to go up. And so it's really, you have to know all of the ins and outs of everybody's balance sheet to be able to, say anything definitive about when the stock market is going to break and, when a crash is going to occur. It's very, very difficult.
So given that we only have a few minutes left, Mark, let's sum it up for individuals who don't have a lot of money or may have a portfolio in their IRA or their 401k. What should they be thinking about doing for the next few months, few years, in order to navigate this boom-bust cycle that could cause a meltdown in the stock market? And what other asset classes are there that people should consider investing in? And of course, with the caveat that you could embrace what Mark is saying, check with your financial advisor, but we're just here to provide educational information. So go ahead, Mark.
Yeah, I'm not a financial advisor, of course, but one thing that I follow to tell me a lot about what's going on in the global economy is the price of gold. How much inflation is there in the system? How much inflation is there expected in the future? What's the level of international risk and the status of the International Division of Labor? And the price of gold has been skyrocketing lately. That's a very bad sign for the overall economy. Even central banks are buying gold. Even they don't trust the U.S. dollar and the U.S. government bonds. So, I think we're in a period right now where we're transitioning from a long period where bonds and government bonds have been very profitable to a longer, higher interest rate environment where bonds are not going to be very profitable. And I think in terms of stock markets, I think we've also changed trends from stocks have been going up in the technology and social media areas. And I think in the future, the trend has changed in favor of the stocks that are in the production of real goods and services, and in particular, commodity producers. There seems to be those two trends seems to have changed. And of course, you wouldn't recognize that if you just looked at the stock market in general. because if one asset category is not doing great and the other one is doing better, you're not going to see that in the overall stock market. But I think that bonds are going to underperform over the long haul moving forward, and I think that commodity stocks are going to outperform in the long haul going forward. And I think, I'm still analyzing this, but I think foreign stocks, emerging market stocks, are going to perform better than other asset categories. Still working on that one, but it's something to consider and to ask your financial planner about.
Just one quick question about that, then we'll wrap it up. Well, actually, I have two questions. So let's talk about one. Berkshire Hathaway is having their annual meeting this coming weekend, and Greg Abel is the new CEO of Berkshire. Warren Buffett stepped down a few months ago, and Berkshire has, I think, nearly $400 billion in treasury bills out of a value of just over $1 trillion. So what does it tell you about Berkshire's view of the financial markets, particularly the stock market?
Well, it's overvalued. I mean, it's what I just said. I agree with Warren Buffett on that. And, he just also said that he doesn't see any good values for he or Berkshire Hathaway to purchase right now. He's going to wait until values improve, and that means either earnings have to increase enormously for an extended period of time, or the price of those assets has to come down significantly. And of course, their portfolio, is a broad-based portfolio of insurance primarily, but also of consumer stocks, Coca-Cola, and railroads. He has a great diversification, money into commodities like oil, and so those are the things, I'd never discount what Warren Buffett says, and I take his thoughts into consideration. And the fact that he thinks the entire stock market is overvalued is a great word of caution.
Mark, you recently wrote a piece about 4 important words. Could you just tell us what they are, and then we can direct people to read your essay from Mises.org. What are those 4 words that you wrote about?
Well, they're actually 4-letter words.
Okay.
So it was a play on the 4-letter words that you're not supposed to say on television or the radio. But these are economic words, and they're words that if you follow them, you'll do well in life, and you will be rest at ease that you're accomplishing things, that you're moving forward, and you're putting forth your best efforts, not worrying about what's going on in New York and Washington or the Middle East, but doing what you're supposed to be doing, and that's work, read, educate yourself, plan your investments, your spending, and so forth, save, which is very important for everybody to protect yourself against downturns, shop, which we all have to buy things, but do it intelligently, give, make your charitable donations, study what you think is the best way to go, and take solace in the fact that you are contributing to various good causes. And the final one is pray. Pray for guidance. Pray that you're making the right decisions, and pray and work in good conscience for yourself, your family, and for those around you.
That is a great sum up of the concept of our show, the pursuit of happiness. If people embrace what you just said, Mark, I think the pursuit of happiness will come very easily to them. Mark, I want to thank you for giving us your insights into the economy, the financial markets, and those 4-letter words of wisdom. How can people find out what you're writing about, and what you're podcasting about? How do they find that?
Well, mises.org. We have articles and lectures, audio, video, podcasts. It's all free. There's no registration. We're trying to teach people, from high schoolers to senior citizens why the free market, how the free market works. We're not interested in proselytizing people to be, ideologues for free markets. We want to show people and teach people how and why markets work and why, from a theoretical perspective, historical perspective, government always seems to fail. It always seems to mess things up, to make things worse. And, everybody is either for or against markets and they're for or against government, but very often they don't know how either one of those things works. And you can start to learn in small doses by going, and my podcast is called Minor Issues, MINOR, and it's a 10-minute weekly podcast where I address something that's not being discussed in the mainstream media, or maybe the issue is being discussed, but it's not being discussed from a free market perspective. And so it's short and it's sweet and it's to the point. And I think you can start educating yourself. And the more you educate yourself, the more confident you'll feel in understanding the world you live in. And you won't be obsessed with, what President Trump is doing or, all of these big global issues, but you'll be more concentrated on your own business and making marginal steps in the right direction of self-betterment.
That's terrific, Mark. Thank you for being here with us. And I just want to thank everybody for tuning in, and visit Macy's.org for all the free material on economics and what the free market is all about. Next week, we're going to shift gears. We're going to be talking about health issues with Dr. Alida Eck from New Jersey, past president of the Association of American Physicians and Surgeons. She's also a pharmacist, so she'll talk about how she treated her patients during the COVID pandemic, about medical insurance, and talk about her nonprofit medical clinic in central New Jersey, which goes into line with what Mark said about giving and how nonprofits, good ones, can really be helpful in our local communities. So we'll be back next week. Visit maffiausa.com. You can find out what we're doing in order to promote financial independence. And next week, please tune in. This podcast will be up on YouTube and Spotify. Tell all your friends about it. And we're going to continue getting people with enormous expertise in health and wealth. And so until next week, have a good week and tune in to Health, Wealth, and the Pursuit of Happiness.